Have you ever looked at your bank account and thought, there has to be a better way to make this money work for me? Most people feel that way. But when they try to learn about investing, they hit a wall of confusing words and complicated ideas. So today, we are keeping it simple. We are going to walk through 7 types of investments. Just clear, honest explanations with real examples you will actually relate to. By the end of this video, you will know more about investing than most adults. Let us start. Hey, I'm Ben, and this is UnBlinkd. First up, stocks. When a company wants to grow, it needs money. So instead of borrowing from a bank, it can sell small pieces of itself to the public. Those pieces are called stocks or shares. When you buy a stock, you become a part owner of that company. Yes, even if it is just a tiny part. Think of it like this. Your friend opens a bakery and sells you 10% of it for $50. The bakery blows up. Now your 10% is worth $200. That is a stock. You own part of something, and when it grows, you grow with it. Best for anyone who can leave their money alone for 5 or more years and are okay with some risk. Number 2, bonds. Think of this as being the bank for someone else. You lend your money to a government or a big company. They use it, then pay you back with interest on top. Picture this. Your cousin needs $1,000 for a car. You lend it and they agree to pay you back $1,100 in 2 years. You made $100 just by lending. Bonds work exactly like that, except the borrower is a government or a large company. Bonds are much safer than stocks. They do not grow as fast, but they will not crash suddenly either. They are the calm and steady option. Best for people who want a safe and predictable return, or who want to balance out riskier investments. Number 3, real estate. You buy property. It goes up in value over time. You can also rent it out and collect monthly cash. Picture this. You buy a small apartment for $100,000. You rent it for $800 a month. 5 years later, the apartment is worth $130,000. You made money every single month, and your property grew in value. That is real estate. Now here's the part most beginners do not know. You do not need to buy a whole building. You can invest in something called a REIT. That stands for Real Estate Investment Trust. It is like buying a stock, but instead of owning part of a company, you own part of a collection of properties. No tenants, no maintenance calls, no stress. Best for people who want steady income and long-term growth, either through property or through REITs. Number 4, mutual funds. Here's the idea in one sentence. A whole bunch of people pool their money together and a professional invests it for them. Think of it like this. Imagine 1,000 people each put in $100 into one big pot. That pot now has $100,000. A smart manager uses that money to buy pieces of 50 different companies. Now every single person who put in $100 is invested in all 50 companies. The big benefit is something called diversification. Instead of putting all your eggs in one basket, your money is spread across many investments. If one fails, the others can still do well. The downside is that mutual funds charge fees because someone is actively managing them. Over many years, those fees can reduce your earnings. Best for beginners who want to manage ready-made mix of investments without picking stocks themselves. Number 5, ETFs and index funds. These are the ones even expert investors love. Instead of trying to pick winning companies, an index fund just buys a tiny piece of every major company in the market. When the economy grows, you grow with it. Think of it like this. Instead of trying to guess which one horse will win the race, you bet on every horse in the race at once. If the race overall goes well, you win. An index fund does exactly this. It buys a tiny piece of every major company, so when the economy grows, your investment grows with it. ETFs work the same way, but you can buy and sell them throughout the day, just like a stock. The best part? The fees are incredibly low because there is no manager making decisions. Best for almost everyone, especially beginners. Low cost, simple, and proven to grow over time. Number 6, cryptocurrency. Cryptocurrency like Bitcoin or Ethereum is digital money. It exists only online and is not controlled by any government or bank. Instead, it runs on a technology called blockchain, which is like a public record book that nobody can cheat. Picture this. Think of a rare trading card. The price is decided purely by what people are willing to pay. And today it is worth $50. Next month it is worth $500. The month after it drops to $80. That is crypto. The value moves fast, and it is driven entirely by what people believe it is worth. Crypto has made some people very rich, but it has also lost people enormous amounts of money. It is one of the most unpredictable investments that exists. Only put in money that you could completely lose and be okay. Do not use your emergency savings or money you will need soon. Best for risk-tolerant investors who already have stable investments and want to add a small speculative amount. Number 7. Alternative investments. This is a broad category for everything that does not fit into the others. We are talking about gold, silver, fine art, collectible items like rare sneakers or trading cards, farmland, and investing in private companies before they become public. Picture this. Your grandparent bought a painting 30 years ago for $200. Today it sells for $8,000. Or they bought gold when it was cheap and it has tripled in value. That is an alternative investment. It is not a stock. It is not a bond. But it still grows. These work differently from stocks and bonds. When the stock market crashes, gold often goes up. That makes alternatives great for protecting your wealth. The downside is they can be hard to sell quickly, and some require a lot of money to get started. Best for investors who already have the basics covered and want to diversify into something different. That is the full breakdown of the 7 types of investments, explained simply. The most powerful thing you can do is simply start, even if it is a small amount. Time is the most important ingredient in investing. The sooner you start, the more time your money has to grow. I'm Ben, and this is UnBlinkd. See what others miss. If this helped you, please like this video and subscribe. Drop a comment below and let us know. Which investment type are you most curious about? See you in the next one.